Hey everyone, welcome back to Corporate Decoder, the place where we crack open these financial reports to see if this company is a golden egg or totally scrambled. Today we're diving into Aixin Life International Inc., a company that's been busy. Let's see what their latest quarterly report tells us about their health and where they're headed. This filing is basically a quarterly checkup for publicly traded companies. Accession Life International Inc. is reporting on their performance up to June 30, 2025. We'll be focusing on the money matters, the story behind the numbers that tell us if this business is thriving, surviving, or maybe even struggling. First up, let's peek at their balance sheet. This is like a snapshot of what the company owns and what it owes. On the asset side, cash and equivalents dropped significant dollars at the end of last year to just under $3,000 by June, $2,000 by June, $2,000 by June 2020. This isn't when achieved Crate 700. This could indicate they've sold off assets or perhaps written down their value, which isn't always a great sign. And Petcat 700. This could indicate they've sold off assets or perhaps written down their value, which isn't always a great sign. On the other side of the balance sheet, liabilities painted a mixed picture. Total liabilities went up slightly overall. What's really jumping out though is the due to related parties, which is a massive $4.5 million this year compared to $2.9 million last year. This means the company owes a lot more money to people or companies connected to its management. And that's a number we always want to watch closely. Now let's look at how the company is actually making or losing money in their statement of operations. For the 3 months ending June 30, 2025, revenue was down substantially, falling to just over $46,000 from $1.3 million in 2024. That's a huge drop, over 65%. It looks like their direct sales, pharmacies, and manufacture and sales segments all saw significant decreases. Their hotel business also had a slight dip. Even with lower sales, their costs didn't quite follow suit. Total operating costs and expenses were over $1.2 million in 2025, down from $1.6 million in 2025. Down from $1.6 million in 2025, compared to a loss of about $26,800 in 2025, compared to a loss of about $26,800 in 2025. Compared to a loss of about $26,800 in 2025, compared to a loss of about $26,80,000 in 2025, compared to a loss of about $26,000 in 2025, compared to a loss of about $26,800 in 2025, compared to a loss of about $26,800 in 2025, compared to a loss of about $26,800 in 2025, compared to a loss of about $26,800 in 2025. This means for every dollar of sales, they are losing much more money this year. The 6-month figures tell a similar story. Revenue for the first half of 2025 was about $86,000, a sharp decline from over $2.1 million in 2024. The loss from operations for the 6-month period also ballooned from around $89,000 in 2024 to nearly $1.5 million in 2025. This trend of increased losses impacts the value for shareholders directly, as seen in the loss per share. For the 3 months ended June 30, 2025, the loss per share was a negative $0.14 compared to a loss of 0.04 cents in the same period last year. For the 6 months, the loss per share widened from 0.7 cents in the same period last year. For the 6 months, the loss per share widened from $0.720 in 2024 to $0. Seek a bigger chunk of their investment disappear with every passing quarter. Let's check the cash flow statement to see where the money is actually moving. For the 6 months ended June 30, 2025, the company used over $1.1 million in operating activities. That's a significant negative number, meaning their core business isn't generating enough cash to cover its expenses. Investing activities also used about $11,000, mostly for purchasing property and equipment. On the financing side, they brought in over $1.1 million in 2025, primarily through advances from related parties. This is the company borrowing money from insiders essentially to stay afloat. This is a lifeline, but it's not a sustainable long-term solution. The report itself flags a serious issue under the heading Going Concern. It states that the company's net losses and negative cash flow from operations raise substantial doubt about its ability to continue as a going concern. This is a big red flag for investors. It means there's a real question about whether the company can survive if things don't improve drastically and quickly. They have a plan involving cost reductions and loans, but the report admits there's no guarantee it will work. Looking closer at the revenue breakdown for the 3 months in 2025, the direct sales segment saw an almost 91% drop, and the pharmacy segment was down 90%. The manufacture and sales segment also dropped by about 51%. These are massive declines across almost all their business areas. The net loss for the 3 months ended June 30, 2025 was $3,595, a significant increase from a $1,767.83 loss in 2024. This 99% increase in their net loss is driven by lower sales, which unfortunately were not offset by enough cost reductions. They're losing more money than before, even though their sales took a big hit. For the 6-month period ending June 30, 2025, the picture is equally grim. Total revenue fell by 61% compared to 2024. The direct sales and pharmacy segments experienced drops exceeding 87%. The manufacture and sales segment also saw a significant 38% decrease in revenue. The loss from operations for the 6 months of 2025 reached almost $1.5 million, a substantial increase from the $89,000 loss in 2024. This growing operational loss suggests that the core businesses are not performing well enough to cover their own costs. The cash flow statement for the first half of 2025 reveals a significant drain on cash in operations. Over $1.1 million was used up in operating activities. This shows that the company's day-to-day business is consuming cash rather than generating it. It's also worth noting the accounts receivable from related parties. While overall accounts receivable decreased, the amount due from related parties remained substantial at $4,440,824 as of June 2025. This indicates that businesses controlled by insiders owe the company money. And on the flip side, the amounts owed to related parties have increased significantly to over $4.5 million. This suggests a reliance on loans or advances from individuals connected to the company's leadership, which at this scale can be a concern for financial independence. The report states a net loss of $1.07 million. For the 6 months of 2025, a substantial increase from the $780,000 loss in 2024. This 38% increase in net loss highlights the ongoing financial challenges the company is facing. Digging into the segments, the pharmacy business for the 6 months ended June 30, 2025 saw revenue drop to $62,407 from $4,978.31 in 2000 and $4,497.831 in 2000% decrease, likely due to economic pressures and a shift towards online shopping. The manufacture and sales segment revenue also declined to $5,000 to $1,003.2 from $889.054, a drop of 38%. This decline is attributed to a challenging economic environment impacting marketing and promotional activities. One of the most critical parts of this report comes from management's assessment of their controls. They state that their disclosure, controls, and procedures were not effective as of June 30, 2025. This is because of limited resources and a lack of staff with accounting expertise. They even identify material weaknesses, which means there's a real chance that financial reporting errors might not be caught in time. This is because of limited resources and a lack of staff with accounting expertise. They even identify material weaknesses, which means there's a real chance that financial reporting errors might not be caught in time. This is a serious internal control issue that can undermine the reliability of all the numbers presented. The company's financial performance is clearly concerning, with revenues plummeting across key segments and operational losses widening significantly. It paints a picture of a business struggling to adapt to current economic conditions. The year-over-year declines in revenue are massive, and given the increasing loss per share and the going concern, warning investors should be very wary. The reliance on advances from related parties also suggests a cash crunch. While they are trying to cut costs and find new funding without a strong turnaround in their core business operations, the outlook remains quite challenging. Alright, that's a wrap on our deep dive into Aixin Life International Inc.'s latest financial report. What do you think about their performance and those significant revenue drops? Are they on the path to recovery or heading for deeper waters? Let us know your thoughts in the comments below. If you found this breakdown helpful, please smash that like button and subscribe for more corporate investigations. And don't forget to join our Discord community linked in the description for even more insights and discussions. Thanks for watching, and we'll see you in the next video.